Ever wondered what could have happened if you'd invested $1,000 in Marathon Digital back in 2018? Well, let's take a stroll down memory lane. By March 2024, that initial investment would have blossomed into a whopping $20,271. That's right, your $1,000 would have grown by an astounding 1,927%. To put it differently, you would have multiplied your investment by 20 times and the annual growth rate, a staggering 83%. Now these numbers might seem mind-boggling, almost unbelievable, but they are not plucked out of thin air. They are the result of Marathon Digital's stellar financial and business performance over the years. But what exactly led to this explosive growth? Was it a fluke, or was it the consequence of well-executed strategies and favorable market conditions? And most importantly, what can we learn from Marathon Digital's journey that might help us make better investment decisions in the future? Well, to answer these questions, we need to delve deeper into Marathon Digital's financials. We need to examine its revenue growth, profit margins, net profits, and more. We need to understand how it has managed its assets and its current ratio. And we need to scrutinize its cash flow and apply the DuPont analysis to get a comprehensive picture of its financial health. So, join me as we embark on this journey of discovery. Let's delve into the numbers, the strategies, and the market conditions that have shaped Marathon Digital's journey from 2018 to 2024. Let's learn the lessons that hindsight offers, and let's use these insights to make better investment decisions in the future. Now, let's dive deeper into the financial and business situation of Marathon Digital to understand this astounding growth. To understand Marathon Digital's growth, we first need to look at their revenue. The last 3 quarters of 2023 saw the company's revenue reaching a remarkable $231 million. Now, let's put that into perspective. Since the year 2018, that represents an annual compound growth rate, or CAGR, of a whopping 182%. But this growth has not been a straightforward upward trajectory. It's been more of a roller coaster ride. From 2018 to 2019, the company actually experienced a revenue decrease of 31%. However, they bounced back the following year, with a growth of 89% from 2019 to 2020. The year 2020 to 2021 witnessed an astounding growth of 5,194%. Then, a slight dip of 1% from 2021 to 2022, but the company picked up the pace again in 2023 with a 160% growth. When we break down Marathon Digital's revenue structure, it becomes apparent where their main income streams lie. A significant 85% of their revenue comes from block rewards. This is followed by a smaller, yet still substantial 10% from participant. Transaction fees, on the other hand, make up a minor 4%. In understanding these figures, we begin to appreciate the dynamics of Marathon Digital's business model, their resilience in the face of fluctuating market conditions, and their ability to capitalize on opportunities for growth. It's not just about the end numbers, but the journey there. Impressive, isn't it? But let's not stop here. Let's take a closer look at their profit margin. Profit margins often reveal more about a company's financial health than revenue alone. So let's dive into Marathon Digital's profit margins. In the last 3 quarters of 2023, Marathon Digital had a rather unusual situation with its profit margins. The gross profit margin stood at negative 11%. This might raise a few eyebrows, as it indicates that the company's cost of goods sold was higher than its revenue. But before you jump to conclusions, let's look at the net profit margin. The net profit margin for the same period was a positive 16%. This is a key indicator that despite the negative gross profit margin, Marathon Digital was able to maintain a profitable operation after factoring in all the operating costs, interest, taxes, and other expenses. Now, this 16% net profit margin might not seem like much on the surface, but when you consider the company's financial history, it becomes a lot more significant. For the first time since 2018, Marathon Digital reported a positive net profit. The company posted a net profit of $36 million in the last 3 quarters of 2023. This shift to profitability is a positive sign for Marathon Digital and its investors. It signals that the company is moving in the right direction and has started to reap the benefits of its strategic decisions and investments. Remember, a company's ability to generate a profit is a crucial factor that potential investors look at when deciding whether to invest. The fact that Marathon Digital has managed to turn a profit after years of losses could be an indication that the company's stock is set for growth. In conclusion, While the negative gross profit margin is a concern, the positive net profit margin and the shift to profitability are promising signs for Marathon Digital. But what about Marathon Digital's assets? Well, that's a story for the next scene. Stay tuned. Assets and liquidity ratios. Let's see how Marathon Digital fares on these fronts. Total assets are a reflection of the company's size and growth potential. They include everything a company owns, both tangible and intangible. In 2023, Marathon Digital reported total assets worth $1.4 billion. This is a significant increase from the previous year, when the company reported total assets worth $1.2 billion. The growth in assets is a positive sign, indicating the company's potential for future growth and expansion. Now, let's turn our attention to net assets. Net assets are what's left after subtracting a company's liabilities from its total assets. An increase in net assets is a good sign. It means the company is growing its wealth. In 2023, Marathon Digital's net assets stood at $1 billion. This is more than double the previous year's figure of $400 million. So what does this mean? Well, it shows that Marathon Digital is not only increasing its total assets, but is also effectively managing its liabilities. Next, let's talk about the current ratio, a liquidity ratio that measures a company's ability to pay short-term obligations. A current ratio over 1 suggests that the company can pay off its obligations if they came due at that point. In 2023, Marathon Digital's current ratio was 11.39, an improvement from the previous year's ratio of 10.69. This indicates that the company has more than enough resources to meet its short-term obligations, further strengthening its financial position. In summary, Marathon Digital has shown growth in both its total and net assets, and its current ratio suggests a strong liquidity position. These are positive signs for the company's financial health, which could potentially translate into stock price growth. There's one more crucial aspect we haven't touched on yet: cash flow. Cash flow, the lifeblood of any business. Let's see how Marathon Digital is doing. Now, when we look at the last 3 quarters of 2023, we spot a bit of a paradox. The operating cash flow for Marathon Digital stands at a negative $224 million, with the free cash flow trailing behind at a negative $337 million. This means money is flowing out of the business more than it's flowing in, which is quite intriguing given that the net profit for the same period is a positive $36 million. A situation like this warrants a deeper dive to understand the dynamics at play. This is where DuPont analysis comes into the picture. It's an approach that breaks down the return on equity, or ROE, into 3 components, giving us a more granular view of the company's financial health. These components are net profit margin, asset turnover, and asset to equity. In the last 3 quarters of 2023, Marathon Digital has an ROE of 4%, which is a stark improvement from the negative 78% in the same period in 2022. The net profit margin, which measures how much of each dollar earned by the company is actually profit, stands at 16%, a far cry from the negative 339% in 2022. Then we have the asset turnover ratio, which tells us how efficiently a company uses its assets to generate sales. For Marathon Digital, it's at 0.18 in 2023, showing a slight increase from 0.15 the previous year. Finally, we have the asset to equity ratio, which stands at 1.36 in 2023, down from 3.1 in 2022, indicating a more balanced financial structure. There you have it, a comprehensive financial and business analysis of Marathon Digital. Remember to subscribe to our channel for more insightful analyses, and feel free to suggest companies you'd like us to analyze next.